Welcome to your new series of your favorite market and investing program, this time the DLM Market Hub. This program today will be looking at a very interesting topic, market making. Market making is a program that creates the enabler for driving increased activities and engagement for the capital market. To discuss this interesting topic with me today is Mr. Idowu Ogedengbe, Executive Director, Dunnlorenmerrifield Securities Nigeria Limited. Mr. Idowu, it's great to have you.
Thank you so much for having me on your first and maiden edition of this show. Thank you.
It's very nice to have you on this interesting topic, market making.
Same here.
And we've heard how market making has really transformed markets, especially in developed economies. Now, what is market making all about by design and concept?
Market making is a process whereby a market maker who is a dealing member firm of an exchange assumes to take on the risk of keeping certain securities in his inventory, on which it gives both a bid and an offer quote on a consistent basis. And the whole idea behind it is to ensure that at every point in time there is a continuous market. So a market maker facilitates an orderly, an efficient, and a balanced market on an exchange.
You said that this program deepens liquidity, creates increased operations and engagement for the market. Now, in Nigeria's context, Nigerian Stock Exchange, which is the leading bourse in sub-Saharan Africa, there has been the launch of this program last year to enable the market post-2008 regain its balance and maintain momentum in increased activities. How has this program played out since its launch in the Nigerian Stock Exchange?
At the commencement of the market making program in September 2012, the Nigerian Stock Exchange appointed 10 market makers through a blind balloting system. And to each of those market makers, 20 stocks were allocated. And market makers were expected to effectively facilitate an efficient, orderly, and balanced market in the securities that were allocated to them. And either remotely or directly, between 2012 September and date, there has been a significant improvement in market numbers, and investor confidence too has been significantly enhanced. As of September 2012, the market capitalization was at 8 trillion. As we speak right now, it is already above 12 billion, about 12.1 trillion. And it's already itching towards the all-time high of 13.5 trillion that was attained in March 2008, shortly before the downturn that we witnessed in the market. So by and large, we could say that the market making program has been relatively effective. It has actually enhanced, deepened the market and enhanced trade flows. The market making program expectedly should significantly contribute to the achievement of the set objective of the Nigerian Stock Exchange. However, there are things or there are issues that needs to be addressed if that is going to be a reality, if it's going to be attained and achieved. Issues relating to securities lending all over the world, in markets where there are market makers. Security lending is a very significant aspect of market making. And as we speak right now, there are still issues relating to the commencement of an effective securities lending market in Nigeria. Initially, there were agreements, the Global Master Security Lending Agreement, that were drafted and approved by the regulatory authority. But as we speak, not one of the appointed security lenders have been able to effectively facilitate any form of security lending in the market. And that goes a long way to affect the ability of the market makers to quote, especially when there is excess demand in the market. It is expected that the market maker should be able to short sell But the exchange frowns at a naked short selling. Every short selling that a market maker does should be covered short selling, and that means that it must have secured a cover from the securities lending agent to offset whatever whatever exposure that he takes on in the course of trading. Up till now, that is not in place. Similarly, when the market is going through a period of massive sell, when there is excessive supply, the market maker is expected to create a balance. It's expected to leverage on his balance sheet towards, absorbing some of these shares into his books. And that can only be facilitated if it has access to liquidity provisioning. And as we speak right now, most of the banks in Nigeria are not in any way supporting the market making program through the provision of liquidity, which is very critical to the success of the program. So that these two critical issues are important for the regulatory authorities to look into if we're going to have the goals of the Nigerian Stock Exchange in facilitating a significant trading environment achieved.
So what are the lessons that the Nigerian Stock Exchange can learn from developed economies where market making is thriving?
I mentioned earlier on that most of the developed countries, the market makers, they are given an opportunity to leverage on their balance sheet. What the bank will just come up with is to possibly give them a leverage multiple as to the extent to which they can mop up securities into their books, which the bank will be willing to cover on their behalf by providing the fund to cover those trades. So as we speak, not even one of the bank is in a position to do that as a result of the CBN policy. So it is very important that the CBN, like most of the central bank in countries where market making is effective, should be able to provide that opportunity for market makers to leverage their balance sheet in order to be able to enhance market balance and take on some measure of risk in a bid to stabilizing the market and making sure that the market is balanced and there is an orderly market.
What are the solutions to these issues you've raised about the market making program in Nigeria? What are the solutions?
Thank you very much. I think it is very important for the various regulatory bodies to come up with a system of policy formulation that is not at cross purposes, that aligns together. Take for example, the CBN has an oversight over the banks and SEC has an oversight over the capital market, and sometimes the policies of the CBN is not in synchronization with that of SEC or the Nigerian Stock Exchange. So there is a need for that policy alignment, so that at every point in time, whatever policy that is going to be applicable to the banks should be viewed as a policy that is applicable to all the players in the financial system. And in that way, we'll be able to move away from what we've observed over the years, whereby there is a lot of counter-productive policies that affect one side of the market at the expense of the others.
Idowu, Ogedengbe, for the time. Indeed, market making is a viable program.
Yes.
Can really drive the capital markets, but needs proper regulations to thrive. Thank you very much for having me. Till our next edition, keep a date with your favorite market and investing program, the DLM Market Hub.